Hi everyone, welcome back to ASX Market Watch and charting trend signals around the world. Fantastic to have you here, absolutely love it. Great to have you checking out the markets with me. Very good of you to stop by. It's just like, let's check out the entire world as we usually do, because there's a lot to go through. There's a lot happening in the world at the moment, actually, a lot. And if you've been listening to this ASX Market Watch for any amount of time, you will know, actually, and I mean, well, let's just jump straight into it. Where we've known for quite some time on the All Ordinaries is way back in March. Sell in May, sorry. Sell in May and go away was the call. Probably a couple of months ago, 3 or 4 months ago now. And yeah, basically that's exactly what has happened. If we look at a weekly chart on the All Ordinaries in Australia, check out this beautiful, beautiful signal. Just ignore the trend lines, by the way, if you can. This is a little zigzag down, down, up, down. That was the signal confirmed in May 2011. Since then, we've had downwards movement and all the way down. If we go back to a daily chart, we had a little false signal in June, but that was called that very day. It was called as a false signal, so it was not an upwards move. Since then, actually last week, I said we had a continuation pattern to the downside right here. And yeah, basically what's happened is the market has continued to the downside. So what we're seeing, guys, is trend following in action. Sometimes it pays just to throw away the predictions and just not make predictions, or if you make them, just don't pay them too much mind. But instead of doing that, follow the trend of the market. We had a signal right here. We had a false signal here, so we got to ignore that one. And we had a new downward signal right here just this very last week. And that's when the market has literally fallen, I think about 10% over the course of a week, which is that's a lot, guys. That's a huge amount. A lot of people would have gotten a shorting signal right there, but yeah, basically, yeah, you'd have to be looking for trades to the downside, and yeah, those who were, they were rewarded very well, and that's a great thing. And again, really, that's the All Ordinaries. There's just not too much to it, guys. At the moment, it's looking at support. It's literally fell to its support at around the 4,200 level. I expected it to take longer than that. The market usually takes a while for these things to unfold. However, as they say, the market goes up by the stairs and down by the elevator. And so that's exactly what's happened. It's gone down by the elevator this last week. Guys, follow the trend. Put your stops in if you're going to trade long. But personally, I would not be trading long at this stage. I would definitely be waiting for the trend to reverse. And yeah, at this stage, it's all up in the air. We might see some consolidations, but yeah, it's going to take time for a new uptrend to emerge. And yeah, it basically will take time. It definitely does not happen overnight. The Dow Jones is in exactly the same position. Last week I said if it closed below this level right here, then that would be the down signal move. We got that not on Monday but on Tuesday, so there was your move down there. And 2 days later, the market's absolutely tanked. And so yeah, basically that's where we're at the moment. On the Dow Jones, if we look at a weekly chart as well, what does this look like to you? Down, up, down. That's a little zigzag pattern down. That's a Dow theory exit, guys. According to Charles Dow in the late 1800s, that was his from his writings. That is your Dow theory exit. So yeah, basically, and I think just today as well, the S&P downgraded the US from a debt situation as well to AA plus instead of AAA. So yeah, that's literally the charts are following, or literally the charts are sort of telling the story before these things happen, because yeah, the markets were falling well before any of these announcements had come out. So yeah, that's the Dow Jones. That's your confirmed downtrend. On a short-term basis, it was around here, and on a longer-term basis, we now have this big zigzag pattern down, which is your Dow theory exit according to Dow theory. The next is the FTSE as well, and as you can see, we have this upward trend line which was broken on Wednesday, it must have been. And again, the market has gone down since then. Obviously, you'd keep, like if you were trading in this particular market, you'd keep your stop at the, at or below the support there. And you could potentially be looking at, obviously it's too late now, but you've got your little zigzag pattern down that could also be your trigger for taking short trades on the FTSE market as well. But yeah, basically that's what we're seeing. That's your Dow theory exit on the FTSE as well. So trend following wise, the trend is down. It's down on a medium term basis. It's down on a short term basis. And really, there's not too much more to it than that. 1, 2, 3, 4, 5. Looking at it from an Elliott wave point of view, A, B, C. See, this is the dangerous thing. It was potentially a new upward move, and it's not now. If we're looking at it from a longer term perspective, we could be looking at it from a new downward move. So as in 1, 2, 1, 2, heading into a wave 3, but to the downside. So your wave 3 is the longest move. That would indicate that it would be a significant move down. At least that's potentially from an Elliott wave point of view to the downside instead of to the upside. Again, check out, there's a course on Elliott wave at my side, as well as trend following techniques, which I prefer over Elliott wave. Who needs predictions when you can follow the trend? Next is the Nikkei. Nikkei, I mean, the exact same thing. It was literally setting up for an upward move, and you know what? The Japanese market has held up a little bit better, but again, trend following wise, it has closed below the uptrend line here, and since it did that, the market has indeed tanked as well. So it's gone down and sort of literally gone down as well. So short term, it's in a downtrend. And that would make it in a medium-term downtrend as well, because we've got this, see this beautiful uptrend line? It's now been crossed. That's your medium-term downtrend on the Nikkei as well. It was doing well there for about 6 months. And again, literally, we called a downtrend here. We called a new uptrend down here. And so this would be your sort of new downtrend based on that little bar there. Again, yeah, pretty much that's all there is to it. It's not rocket science. Very simple stuff. Next up is the Shanghai Composite, and we've been calling, I mean, look at this, it's in this long-term downtrend. So what happens is it finds resistance there, it finds resistance there, finds resistance there at this trend line, and it, literally like clockwork, it finds resistance at the trend line. This is just one of the awesome powers of a simple trend line. And yeah, basically you're looking at this short upward move, started to reverse, got a little zigzag pattern down, and now we're also in a short-term downtrend as well as a medium and long-term downtrend on the Shanghai Composite in China. And actually, just for giggles as well, let's have a quick look at the long-term line. There we go. That's the long-term uptrend line, and yeah, so well below that. There's your little signal there crossing down below that line, and yeah, basically that's your short-term downtrend on the Shanghai Composite in China. So that's heading down as well. Yes, when the worlds move they move together, they're very synchronized, the world markets, even more so than you'd believe. The Hang Seng Index in Hong Kong, this is the Hang Seng, and again, just really quickly looking at a weekly chart. There we go. Oh, what's this? Down, up, down. That's a Dow theory, and again, just ignore the other lines there, but that's a Dow theory exit. It happened in June 2011, and again, we've been saying it's in a medium-term to long-term downtrend. It's been in a short-term downtrend basically since Wednesday as well. There's your little signal there, just basically crossing the short-term trend line, but also finding resistance at the look at that. At this short-term downtrend line, it finds resistance there, as it tends to do. And again, yeah, so the Hang Seng Index is definitely in a short-term, medium-term, and long-term downtrend as well. Not too much to it. Very simple stuff there, guys. Yeah, again, it's going to take time for a new uptrend to emerge. So it takes usually 1 to 2 months for an uptrend to solidly emerge. So again, yeah, you've just got to be very wary in situations like these. Keep your stop losses in. If you're not in cash, which I personally am, and yeah, I should be shorting, but I'm just in cash at the moment just because things are a bit scary. But yeah, basically, if you have got the gumption to be shorting right now, yeah, you definitely use your shorting signals, and again, still don't risk too much. Use your stop losses, obviously, as well. Last but not least is the BSE 30, and again, I mean, yeah, look at this beautiful thing. It's 1, 2, 3, 4 times it's bounced off this downtrend line to the downside. So it's in a medium-term downtrend, and just last week got a short-term downtrend signal as well. So simple stuff. Very, very simple. Not rocket science in any way, shape, or form. Looking at it on a weekly chart, it's just flirting with this support at 17,345, but still it's in a medium-term downtrend, short-term downtrend. So yeah, personally, in any of these markets, I would not be taking long trades unless you were trading contrary to the trend. However, as you can see, looking at the All Ordinaries, the trading with the trend really can help you out, if not just keep you safe, and that's really the main thing in the markets. As Warren Buffett says, look after the downside because the upside will take care of itself. Guys, that is the world from a Chartist point of view. Basically what we're looking at, levels of support on the All Ordinaries is 4,200. Next up you've got 4,000 is the round number, so that would be the next one to watch. After that, it's 3,700. So literally, we've got potentially another 200 points before 4,000, and then another 300 points before 3,700. And after that, we've got the bottom of the bear market, which is, hello. But apart from that, guys, just follow the trend. Follow the trend. It will keep you safer in the markets. Apart from that, have a great week and watch these events unfold with gusto, and make sure you follow the trend. Keep your stops in. Don't risk too much. Happy days. I will see you next week. Bye for now, guys.